The U.S. president and the Saudi crown prince, of course, tout pledges for $1 trillion worth of deals, but the details are scant so far. U.S. tech takes center stage with Nvidia, Amazon and AMD among those announcing more projects in the Middle East. Plus, NATO puts together plans to meet U.S. demands for members to spend 5% of their GDP on defense. So there is a lot going on. We have our eyes firmly on the Middle East. And of course, we watch what President Trump does or signs next. This is a picture overall for the markets. Now, it's very clear that stocks are fluctuating. Traders awaiting a fresh catalyst maybe for the rally that erased the S&P 500's loss in 2025. Again, we're in the middle of this U.S.-China trade truce, and that's been reigniting some demand for technology shares. Now, a couple of the other things we're watching out for. It's clear also that President Trump has put U.S. technology initiatives at the center of his visit to the Middle East. Speaking to the Middle East, these are live pictures of the Crown Prince of Saudi Arabia with, of course, the President of the United States. We have heard from some companies in, of course, Riyadh, including Nvidia, but also AMD, that were up after announcing they would supply semiconductors to a Saudi Arabian artificial intelligence firm. Now, markets are digesting this frenzy of diplomacy as President Donald Trump does deals in the desert, and traders hold out for signs of more progress in U.S.-China trade talks. Let's start with the latest on Trump's Middle East tour. The U.S. president and Saudi Arabia's crown prince touting pledges for $1 trillion worth of deals. Now, the total amount is unclear, but the White House later saying that investments are worth $600 billion. Trump also touched on the region's geopolitics, urging Iran to make a nuclear deal and vowing to lift sanctions on Syria.
Apple is investing $500 billion. Nvidia is investing. TSMC is investing $200 billion. And with this trip, we're adding over $1 trillion more in terms of investment. I have never believed in having permanent enemies. I am different than a lot of people think. I don't like permanent enemies. If I can make a deal with Iran, I'll be very happy if we're going to make your region and the world a safer place. But if Iran's leadership rejects this olive branch and continues to attack their neighbors, then we will have no choice but to inflict massive maximum pressure. I will be ordering the cessation of sanctions against Syria in order to give them a chance at greatness.
We understand that President Trump may also be meeting the new Syria leader after lifting some of those sanctions. Let's go straight to our Bloomberg anchor, Jumana Barseche, who's joining us from the Saudi capital, Riyadh. Jumana, good morning. So President Trump is meeting with the Syrian president. This feels like a very big deal.
Absolutely. So, Francine, if yesterday was about deal-making, those big headline investments and agreements, MOUs being announced, today is about regional security. You're looking at images of a GCC Leaders Summit that is taking place right now at the biggest names, the biggest heads of state from the region, all congregating here in Riyadh. Abu Dhabi, represented by the Crown Prince, but we have the Qatari PM, the Emir of Kuwait, all of them attending this meeting. And then one surprise visitor, and that is the Syrian President Ahmed al-Sharaa. As we understand, President Trump just sat down with him for a more than 30-minute conversation, a bilateral conversation between the two. This coming on the heels of that major announcement that President Trump made during his speech yesterday, that the U.S. are looking to lift sanctions on the Syrian regime and Syrian government, I should say. This after a decade, more than a decade of civil war, an economy that has been ravaged both by war, but also the weight of those economic sanctions, and is part and parcel of an effort to rehabilitate the Syrian government and bring them back into the international community. For his part, the Syrian President Ahmed al-Sharaa has only actually made one visit outside of the Middle East, and that was to France last week. He met with the French President Emmanuel Macron. So there were expectations building that there would be some sort of announcement of some sort in this coming week. vis-a-vis those sanctions. But yesterday, that was one of the big headline grabbers from President Trump's speech. And he also credited the Crown Prince MBS for getting them across the line, in addition to the Turkish president as well. So a major milestone, and also just tells you about the Trump administration's priorities in the Middle East. And that is one, to help some of those governments that in the past were allied to Iran to break away from Iran's grip and hopefully usher in an era of stability and economic prosperity.
Jumana, also, I mean, deals were announced. So we're quite thin on details, but talk us through them.
Yeah, so the major headline is that $600 billion pledge from Saudi Arabia into the U.S. Later, during the speech, Crown Prince Mohammed bin Salman did say that they're looking to beef up that number to get to $1 trillion. We don't know exactly how they're going to get to that figure, especially given some people have pointed out $1 trillion is basically the size of the Saudi Arabian economy. But what we do know is the deals that were inked, the MOUs that were signed yesterday at that business forum amounted to about $300 billion. And here we're talking about one major defense deal, $142 billion worth. The White House saying that is the largest defense deal in history, with Saudi Arabia pledging to buy arms and weaponry from the U.S. Another deal in AI space, so you were talking about that earlier. Big one for some of those U.S. chip makers, Nvidia and AMD, which bounced on the back of that news. They're going to be supplying AI data centers with chips needed to power those data centers. So that was a big breakthrough as well. We talk about further energy cooperation, Aramco looking to invest more than $4 billion in a Texas refinery. And then on the Boeing side of things, we also had an announcement from a PIF-owned aviation leasing company. They're going to spend more than $4 billion on Boeing 737 MAX jets. So lots of deals being inked. The headline figure, though, $600 billion. They're working towards the $1 trillion figure.
Jumana, thanks so much. Jumana Bersetcha there in Riyadh. And then we're also listening, of course, to the Crown Prince of Saudi Arabia in that, well, it's not a press conference, but he's certainly speaking to dignitaries and chief executives. Now, let's also bring in Arend Kapteyn. He's Global Head of Economics and Strategy Research at UBS. Arend, thank you for joining us. Look, without focusing too much on the Middle East, I mean, it feels like a new dawn. It feels like Donald Trump wants to do deals, or certainly he puts tariffs, but then, you know, there's always a negotiating tactic. Is this different, Donald Trump, to what we saw 3 weeks ago? And does that have an impact of your economic forecasts?
Not really. One of our political consultants called this a vacation from contention, right? They think he's in his comfort zone in the Middle East, making deals and basically exchanging, I think, defense commitments for investments. So, no, I think the way, in the tradable universe, we obviously look through an oil lens. So, is there anything that's being discussed that has a bearing on that? Now, I think Iran certainly does. We're already now, though, at oil price levels where really any new production in the U.S. is not profitable. So it's sort of interesting where this is going. There's been this real push both on the part of Saudi Arabia to basically increase output and get oil prices down. There's been a push by Trump to also get oil prices down. It's working, right? So I think we're going to see it in tomorrow's PPI data. I think we've already seen a little bit in yesterday's CPI data. And potentially more to come. But we're now at these levels where you're going to start to have a production impact. So how that impacts, I think, the U.S. economy remains to be seen.
But, Arend, I mean, what did you learn about his deal-making with China, for example? So this is, I think, without a doubt, in terms of the economy, the biggest game changer. Let's see what happens in 90 days. But if he's giving China a potentially better deal than the UK, after slamming them for so many years, how do you change actually your forecast, and what does it mean for other potential deals? Yeah,
I mean, I don't think he's given China a better deal than the UK, right? I mean, China is now at an all-in tariff of something like 43.5%. The UK is at about 9%, right? So it's not quite comparable. But yeah, it was very surprising, right? So, Bessent has basically sort of said that, the landing zone after 90 days is somewhere between 10 and 34, so that is meaningful. Now, very unclear how the border tariffs feed into that, whether they're stacked on top of, they can be consolidated. But yeah, that's a meaningfully better outlook. So if you just take at face value where we are today, then the weighted average U.S. import tariff has gone from about 24, 25 to 15, right? Yeah. But it was 2.5 at the start of the year, right? So it's still a sort of meaningful slowing. We have the, the pharma tariff still coming. We have the semi-tariffs coming. Okay. The comment period for minerals and trucking ends, I believe, on Friday. So, and we're still in this 90-day pause where things should actually go up, right? So I think the concerning thing for us,
don't cry victory.
It's too early to declare victory, and I think what's worrying about the UK deal is that if you do not touch the 10%, which is basically what everyone is subject to, then that's a problem, because then really are we sort of at peak relief right now, where now the tariffs can sort of only drift back up.
Yeah, and I didn't mean to say that actually the UK had a worse deal, but from where they started, yes, China was better at negotiating.
Well, you're right. You could come down from a much higher level. So, look, so economically, this means you go in the U.S. from a 2.5% of GDP import tax to 1.5% of GDP import tax, all in. Yeah. That's going to be worth, we think on the U.S. growth numbers about 40
Arend,
basis points.
I'm going to cut you off because the president's speaking. Let's listen in.
Oman, Kuwait, Bahrain, all friends. As I said in my address last night, the Gulf nations are at the forefront of creating a stable, peaceful, and prosperous Middle East. And I have to say that I've seen such progress. It's really incredible. I've also seen great unity and friendships. I've spent a little time with you just before this, and I've seen tremendous unity, tremendous friendship, and the whole world is watching the Middle East, and many are watching with envy. You have something very special going on. Incredible opportunities are within reach for this region. If we can simply stop the aggression from a small group of pretty bad actors. The Biden administration created havoc and bedlam by basically being incompetent, but by empowering Iran and its proxies, sending them billions of dollars, billions and billions of dollars, senselessly. I couldn't believe it to watch. One of the reasons I said, let's do this again. But what they did was so bad, while turning his back on the Gulf allies. Those days are over. Everybody at this table knows where my loyalties lie, always have. They'll never waver, never. And we'll stand with our friends and partners, and we'll confront the aggression that threatens us all. I want to make a deal with Iran. I want to do something if it's possible. But for that to happen, it must stop sponsoring terror, halt its bloody proxy wars, and permanently and verifiably cease its pursuit of nuclear weapons. They cannot have a nuclear weapon. I don't imagine there's anybody at this table or anybody in this room that would say they can. I'm strongly urging all nations to join us in fully and totally enforcing the sanctions that I just placed on Iran, and we also place secondary sanctions, which are in certain ways even more devastating. Iran, as you know, had no money when I left office. They were broke. They had no money for Hamas. They had no money for Hezbollah. There was no attack. There was no thought of attack. There would have been no attack if I were president. But bad things happened in that election. And I said, let's do it again. And by doing it again, it became much more historic. It's a much more historic election, much more powerful election. And we have a mandate. We won every swing state. We won by millions of votes. We won 2,750 districts. We call them districts. Out of a total, if you look at the number, it was 2,750 to 505. The whole map was red, red meaning Republican. So I will say recently we launched strikes on more than 1,100 Houthi targets in Yemen, as you know. And last week they agreed to stop. They don't want to be targeting our commercial ships anymore. And they said, that's enough, that's enough. We did about 52 days, 52 nights. It didn't end. We just put in a budget of $1 trillion. It's our biggest budget, military budget, we have ever put in. And the United States is very, very strong right now. It's amazing. In a short period of time, we've been there 100 days. And in a short period of time, we've done what a lot of people don't do in 4 years. We're a hot country, just like you're a hot area. And we're going to keep it that way. In Gaza, my administration shares the hope of so many in this region for future of safety and dignity of the Palestinian people. But that cannot happen as long as Gaza's leaders take delight in raping, torturing, and murdering innocent people. Can't have it. I greatly appreciate the constructive role that the leaders in this room have played in trying to bring the terrible conflict to an end, including by helping secure the release of American hostage Edan Alexander. It was a big day yesterday, a very important day. I was told just before I left that they were going to be releasing Idan. We thought Idan was dead. 3 weeks ago, they said Idan was no longer living. And it was a very, very good thing. Ultimately, all hostages of all nationalities must be released as a stepping stone to peace, and I think it's going to be happening. A lot of things are happening. A lot of very positive things are happening on every front. With the support of leaders in this room, and they're great leaders, you are, we are currently exploring normalizing relations with Syria's new government, as you know, beginning with my meeting with President Ahmed al-Sharaa and Secretary Rubio's meeting with the Syrian foreign minister in Turkey after discussing the situation with Crown Prince Mohammed and President Erdogan of Turkey. I am also ordering the cessation of sanctions against Syria to give them a fresh start. It gives them a chance for greatness. The sanctions were really crippling, very powerful. And I spoke to Mohammed, and I spoke to our friend from Turkey, who we just spoke to also by phone now, but felt very strongly that this would give them a chance. It's not going to be easy anyway, so it gives them a good, strong chance. And it was my honor to do so. So we will be dropping all of the sanctions on Syria, which I think really is going to be a good thing. And we made a speech last night, and that was the thing that got the biggest applause from the room. We had a very crowded room with thousands of people, and the statement that got the biggest applause was dropping the sanctions on Syria. Likewise, in Lebanon, there's a new chance for a future free from the grip of Hezbollah terrorists if the new president and prime minister can rebuild an effective Lebanese state. We just appointed a very good ambassador, a friend of mine who's Lebanese, and I didn't even know that. And I said, why do you want to be the ambassador to Lebanon? That could be dangerous. He said, I don't care. I grew up there. I love the country, and I don't care if it's dangerous or not dangerous. I want to do that. And he's a very capable man, very successful man from the United States, and he's going to be your ambassador. He's going to do a great job. But this is a once-in-a-generation opportunity to forge a Lebanon that is prosperous and at peace with its neighbors. And I think things can really happen there. They've had a tough go of it for a long time. At the end of my first term, all of the momentum in this region was toward peace. I especially want to thank and congratulate the United Arab Emirates and Bahrain for their vision and courage in signing the historic Abraham Accords. It was something that's a very big thing. I believe we would have had it filled out had the election been called fairly, which it wasn't. It was a rigged election. I hope that in the near future we can continue that progress. We have a mandate from the American people, the likes of which people haven't seen for 129 years. They say it was the most consequential election in America in 129 years. So that sounds like a long time, so we'll take that. But in the future, we'll continue that progress by adding more countries to the Abraham Accords. We have 4, and I think they're going to be filling up very rapidly. Biden didn't do anything because he never did anything about anything. He had no capability, he had no ability, and it was a shame what he's done to so many countries, including our own. We had an interesting fact. About a year ago, there was a story that we're having a hard time getting enlistments into the military, and it was at the lowest level almost ever. People didn't want to go into our military. And it just came out last week, you probably saw that we have now the strongest enlistment in the history of our country. They say 38 years. One said 37, one said 32, and one said ever. So we just had the strongest enlistment in the history of the United States of America. So think of it. In 1 year, we went from they can't get people to enlist to we have the strongest enlistment, and that includes the police departments too. We're having a hard time getting people to be police, the great law enforcement arm that we're known for, and now we're setting records. It's hard to get a job. I mean, frankly, the the lines of people wanting to be police officers and go into the military. And it's a matter of spirit. We have great spirit in the country right now. We've done a lot in 100 days, I'll tell you that. It's all started on November 5th with the election. But a stable and peaceful Middle East will be a successful and prosperous Middle East. And that's what you've done, and that's what you're doing. And, you know, it's amazing because when I was here last, it was fine. It was doing good. And then I see the things that you're doing here and in your countries. It's just an incredible what you're doing. Is the whole world is talking about it. The whole world is watching us. Look at all the news over there, the fake news. Look at them. The whole world is talking about what you're doing, and you're the envy of the world. Together, we're in this room, and we're going to forge a Middle East that will be a thriving commercial, diplomatic, and cultural crossroads at the geographic center of the world. That's what it is. It's the center of the world. I look forward to working with you, and I want to thank Mohammed. I want to thank you, Crown Prince. We have a special relationship. We have long had a special relationship, but it was an honor to spend a couple of days with you, and I'll see you again soon, and I'll see you a lot. Thank you all very much. Thank you.
شكرا فخامة الرئيس على كلمتكم والآن أدعو جلالة الملك حمد بن عيسى الخليفة ملك مملكة.
So that was President Trump. We're now hearing, of course, from the Crown Prince. First of all, they were touting this $1 trillion pledge, as some of the details remain elusive. And then, of course, President Trump, in a speech that really touched many, many things, including the elections in the U.S. a couple of times, said that he was exploring normalizing relations with the Syrian government. There was a very friendly chat, especially at the end, between the Crown Prince and President Trump, saying that the Middle East certainly seems like it's the center of the world right now. Now, to talk a little bit more about the markets, to talk a little bit more about the implications maybe of some of these new friendly relationships, let's get back to Arend Kapteyn. He's Global Head of Economics and Strategy Research at UBS. Arend, thank you so much for staying with us. We were listening to the speech together. I know some of the implications, of course, could have with oil, because Donald Trump has said he favors this $40 to $50 oil. But it seems that President Trump is focusing a lot on foreign relations at the moment. I mean, back home, it's all about inflation. So really, traders are experts in foreign policy whilst having to figure out what the Fed does.
And it's partly about inflation because everyone's sort of waiting to see when do these tariffs show up, what part of the data is it going to affect, how disruptive is it? And so you're going to see it, one of the first places you're going to see it is inflation. Now, I think yesterday's print, just to remind people, that was an April print, which is really only going to capture what happened in February. There's about a 2-month lag, right? So back in February, we had really just the 10% border tariff on China. So we expected to see something. Now, on the good side, it was sort of an elevated print, but actually, frankly, difficult to disentangle from other non-tariff-related elevated sort of goods price prints. So not a whole lot of evidence yet in that print. Now, as we get to the next print, so that'll be a May print released in June, we're going to then have the March data. Again, that's before sort of the real tariff escalation. So you really have to sort of wait until you get the June release in July, where you start to see, I think, very significant sort of price impacts. And you can see that, for instance, also in the duties that have been collected, which really were sort of concentrated in April and not in March or February.
Arend, a couple of questions. So I was actually in Iceland last Friday, and we spoke to John Williams. We spoke also to Governor Adriana Kugler. They have this dual mandate. There does seem to be a feeling that actually the Fed will focus more on inflation, right? Because that's what they really worried about. And so trade negotiations, as you say, go up and down. How many Fed cuts are you expecting this year?
Well, so we have 4, and it's actually counter to what their own models are saying. So I think you're right that if so they have about 7 different policy rules. If you put in the tariff impact on inflation and on growth, you would get more inflation than you would get unemployment, right? And so in their models, what that would then imply is that the Fed funds rate needs to go up. Now, up until, I think, Powell's last press conference, I thought it was pretty clear that they wanted to ignore those models, right? So I think and it's sort of dealing with the sicker patient. So even if you have, an increase in inflation, if that is a one-off level shift and it goes back down, but unemployment starts to sort of drift higher, that's much more difficult to stop. So I think they want to ultimately react to a potential rise in unemployment, but they have this problem that the inflation impact is going to show up first. They're not back at target. It is still, even with this de-escalation, a very large inflation impact. We think you could be looking at 3.5% core PCE by the end of the year. And so I think they're going to have to wait. So we think, by the time you get to September, they'll be able to start delivering about 100 basis points in cuts. And at that point, we're going to see some weakening in payrolls.
Arend, thank you so much. Let's also get to the Middle East, where our chief emerging markets economist, Ziad Daoud, is there. He works for Bloomberg Economics. Ziad, we were listening to the speech of Donald Trump together. Now it's the turn of the Crown Prince to speak. There's a lot of deals being touted, but will they really materialize?
Well, there are very large numbers that are being touted, as you mentioned, Francine. We're talking about $600 billion to $1 trillion worth of deals. Are they likely to materialize? I don't think so. The first reason is, if you look at what Saudi domestic funding needs, basically we estimate that they need an oil price of around $100 per barrel to meet their domestic spending needs. And that doesn't leave them with much to spend abroad. If you look at the market price, it's lower than that. It's around $60 to $65 per barrel, which is lower than the price that they need to fund their domestic spending. And that leaves them with a budget deficit, which we estimate to be around $70 billion this year. Now, here is the most important fact about the Saudi economy today. We often think of Saudi Arabia as a source of energy and capital to the rest of the world. It is still an important source of energy to the world, but it's no longer a provider of capital and funds to the global economy. Saudi became a net borrower from the world rather than net lender last year because it ran a current account deficit. It ran that current account deficit when oil prices were $80 per barrel. That is likely to continue when oil is at $60 or $65 per barrel. So are these deals likely to materialize? Some of them may be, but the large numbers that we're talking about, they're probably unlikely to come true.
Okay, thank you so much. Of course, what this also means is maybe there's trade being renegotiated depending on allies. Ziad Daoud there from Bloomberg Economics. Thank you, Arend Kapteyn, also of UBS Investment Bank. Now, coming up, the dollar weakens after Monday's gains. We'll discuss the outlook for currencies with the Goldman Sachs global head of global FX. Now, the focus, of course, remains on the Middle East. The Trump administration, again, clearing a path for Saudi Arabia and the United Arab Emirates to pursue their artificial intelligence ambition. This was some of the big news that we had over the last 24 hours. U.S. tech companies like Nvidia and AMD possibly planning to spend billions of dollars in the regions. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Donald Trump says the U.S. is exploring normalizing relations with Syria's new government after the toppling of President Bashar al-Assad. U.S. tech takes center stage, though, with Nvidia, Amazon, and AMD among those announcing more projects in the Middle East. Plus, NATO puts together plans to meet U.S. demands for members to spend 5% of their GDP on defense. So the dollar has weakened against the euro, yen and pound after a bounce over the past few days. Now for more, let's bring in Kamakshya Trivedi, head of global foreign exchange, interest rates and emerging market strategy at Goldman Sachs. Kamakshya, thank you so much for joining us. I mean, there's so much going on, right? It's trade, it's US-China, it's now everything in the Middle East. What happens to dollar from now?
I think the dollar is going to continue to weaken from here. I think the leadership might change a little bit. It's already been changing. If you look at the past 6 weeks, the first 3 weeks were very much dollar weakening against the safe havens, the yen, the Swiss franc, the euro, as we sort of priced up recession risks. Now, as we've seen some of the relief from the tariff side, as recession risks have come down, it's been much more the riskier parts of G10, the Aussies, the sterlings that have taken the lead, and emerging market currencies, of course, Brazilian real, sort of been big lead. But I think the big change is going to be what happens in Asia. I think we've made a big shift to our views. We think the CNY is going to appreciate versus the dollar going forward. And that's an important anchor for global foreign exchange markets, but particularly Asian foreign exchange markets. And so I think you are going to see dollar weakening against that complex as well. Okay, I have viewer questions. I love viewer questions. So you see, they watch you, they see you, and they want to ask you a couple of things, which I'll get to. I have one or two questions on Germany and the 10-year there. But actually, when you look at the drivers for dollar, is the market reacting a little bit too quickly? When you see, trade and tariffs, fundamentally nothing's changed yet, and things could move quite fast. So how difficult is it to just get a feeling of price? It's a fair question. I mean, I think there have been a lot of policy shifts. They're happening very quickly. I think the market is racing back and forth to price it. So certainly, a few days ago, it felt, we had, for example, for the euro dollar, a kind of, 3-month forecast of 112, 6-month forecast of 115. Things had run quite far ahead of that. Now it seems like we've pulled back a little bit. I think that's fair. Nothing ever moves in a straight line. I think realized FX wall is high. I think it's likely to stay high for some time. But I think the broader trend has not really shifted, in my view. I think that U.S. exceptionalism is eroding. It's eroding gradually. I think these moves have longer to run. But, of course, you're going to see some back and forth over time.
OK, so what do you do with treasuries? And, again, there are a couple of questions. I mean, there was a treasury auction that didn't go so great, and the other one went really well. We don't 100% know who is buying into that. But where do you see treasuries heading?
Yeah, look, I think that it's an interesting question because on the one hand, clearly the events of the weekend, the sort of, reducing of tariffs between China and the U.S., I think takes down recession risks. And so that's important. But it also means that on the other side, you kind of push back the possibility of Fed cuts. We've, pushed back the next Fed cut to something like the end of the year in December. And so I think there are sort of a couple of impulses here. One is, yes, we are expecting slower growth. But the inflationary impacts of the tariffs that have already been in place are likely to come through. And so I still think that the premium that you have at the longer end of the curve in treasuries is likely to prove somewhat sticky. I think the current levels, 4.5% thereabout, I think is the right ballpark. And if anything, as we go through the summer period, as we get somewhat higher inflation, as we realize the full contours of the fiscal plan going through Congress, I worry a little bit about the upside now more than the downside, given that recession risks have gone down.
But Kamakshya, only one cut from the Fed towards the end of the year. Is that because they're focusing on inflation? They worry about inflation. And if actually they get it wrong, do they have to cut quite steeply and aggressively and fast?
They certainly have the room to do so if, for example, the economic data slows much more drastically. If recession risks become important again, they have the room to cut much faster, as you say. But I think, we have taken those recession probabilities down. The market has taken those odds down, which is part of the reason why we think, growth, while still slower than last year, while still slower than trend, is going to hold up okay. That is going to mean that the Fed is going to focus both on inflation and that soggy growth picture and probably be on hold until the end of the year. OK,
the viewer has been very patient. Let me get to that question. What's your view on the German 10-year now that the dust has started to settle post the German election? And, basically, where do you stand? Because there are some analysts calling a 4% level right after the package announcement. I mean, it was a rocky start for the Chancellor.
Right. I think the big shift was, of course, the decision in Germany to expand the fiscal envelope. I think that is the biggest issue for the German Bund. I think that's why we think, 10-year yields in Germany are going to head towards the 3% level, maybe just short of that by year end. But that's the direction of travel, and that really hasn't shifted. And I think it's important also in the context of the FX discussion we were having. I think for a decade or more, the policy mix in Europe was essentially one of fiscal restraint and easy monetary policy, which is a kind of currency negative mix. It looks like we are seeing a shift. We are seeing a shift towards slightly more expansionary fiscal policy, certainly in Germany. But you're also seeing the ECB coming up with a little bit more hawkish rhetoric that they don't want the rates to go down as much. And so that policy mix is much more euro supportive at the same time as the U.S. is now aiming for the opposite. They're aiming for a little bit more fiscal restraint. The policy administration would like to see lower rates. It's a different question whether they will get them, but I think that's part of what's playing into the stronger euro, weaker dollar view as well.
Overall, that spending package from Germany is very large, but I don't think we'll see effects from before 2026, right?
Sure.
So that's a point. But will they really outweigh some of the negatives that could come from trade, but also what's happening on geopolitics with Russia?
I think it's, again, there is not a huge amount of premium in these assets from the geopolitics yet. So we've taken a lot of that risk out of many of the assets already. So I'm not sure that will be the sort of marginal driver. But I think you're right that, the proof of the pudding in Europe is going to be delivery. There is a proposal, there is a package, but, when the spending actually hits the road, when the rubber meets the road, I think that's going to be the key. So we've done a lot of front running of that. I think that's why yields are where they are. But I think to get to that kind of higher 3% type level, I think you need to see the growth side pick up. You need the fiscal delivery to come through.
there's a lot that, even on U.S.-China. I don't know whether what you do with renminbi right now, or whether you play it through yen or even Swiss franc.
I think that one of the biggest shift is going to be a gradual but controlled move weaker in dollar renminbi, as in the renminbi stronger. I think that we're going to head towards the 700 level. I think we're probably even going to go potentially below that. I think that China, if you look at the strength of its trade balance, the fact that it has, a lower exposure to the U.S. than in the first trade war, if you look at the fact that the currency is undervalued both on a trade-weighted basis, but also especially versus the dollar, I think they can afford to have some appreciation in return for more reasonable trade outcomes. And I think that is the kind of, even if that agreement is not explicit, I think we will see something of that nature going forward. I think you've already seen that a little bit in the way that the fix has been moving slightly stronger in the next few days. But this is China. Nothing is going to happen in a rush. It's all going to be controlled. It's all going to be gradual. And so you're right that people are going to look to other currencies in the region to kind of express that view. That may be, Korean won. It was probably Taiwan a couple of weeks ago. So I would be quite ambitious about how big these moves can be. But I think it's not going to happen in the CNY. The CNY is going to be slow and steady.
Okay, sterling. We have to talk about sterling because we had a big week for the Bank of England. Yesterday there was the pension accord, the Mansion House. Where do we go with GBP?
I think GBP is going stronger from here. I mean, I think that, again, I think of sterling as a currency that requires the right mix of risk sentiment. I think it struggles a little bit if risk sentiment is under too much pressure. But the fact that we've seen that relaxation, I think, has helped cable go back up to around 133. Our 12-month target is 139. We think it's going to sort of move there. It's not that cheap anymore, the currency, to be fair, but we think it can overshoot if we are right in terms of where equities are going and where the overall sort of Bank of England setup remains, which at least till the end of the year, till the second half of the year, I would say till September, is still going to be on this sort of gradual cutting path. Beyond that, maybe rates become a better trade than the currency. But right now, we still think there's room for sterling to strengthen further.
So interesting. Thank you for joining us. That was, of course, Kamakshya Trivedi, Global Head of FX Rates and EM Strategy at Goldman Sachs. We could have talked for another hour and a half to go around the world, but we'll get you back in. Now, President Donald Trump says the U.S. is exploring normalizing relations with the Syrian government after the toppling of President Bashar al-Assad.
We are currently exploring normalizing relations with Syria's new government, as you know, beginning with my meeting with President Ahmed al-Sharaa. I am also ordering the cessation of sanctions against Syria to give them a fresh start. It gives them a chance for greatness.
We were listening to that briefing together just about 10 minutes ago. The president spoke after a brief meeting, we understand, with the Syrian president in the Saudi capital, Riyadh, but also with the Turkish president, Erdogan, dialing into the discussion. Then the president went on to say that Secretary of State, Marco Rubio, would meet with his Syrian counterparts. This is on the back of possible deals, thin on details, but of course a memorandum of understanding that there will be deals between the U.S. and the Middle East. Now, Bloomberg has also learned that NATO allies have started putting together an agreement to significantly boost defense spending in a way that may assuage Donald Trump's demand to spend 5% of economic output on the military. Now, for more, let's go to Bloomberg's Oliver Crook in Berlin. Ollie, good morning. So what do we know about this plan?
Yeah, so listen, we're in a position here where NATO is basically needing to prove itself to the United States and is almost auditioning to the United States. And that audition will come into full force in June when you have the main NATO meeting that we're expecting Trump to attend in The Hague. But ahead of that, we have defense ministers meeting right now in Turkey in order to sketch out a plan of what that plan that they're going to present to the United States and to the rest of the world would look like. And what they would like to do is to satisfy the request from Donald Trump, which he has made repeatedly in the lead up to the election and afterwards, for 5% of GDP spent, up from that 2% minimum level up to 5%. So what they are discussing is basically raising that 2% level to 3.5% on sheer defense, then another 1.5% that will be a slightly more sort of wide definition of what it could include in terms of defense. It could be cybersecurity, it could be dual use projects, those sorts of things, the kinds of things that are not just strictly speaking defense, but would satisfy the Trump administration. And again, the reason that this is so key, we obviously know all of the reasons why Europe is intensely dependent on the United States and the continued support support of Ukraine from the United States. But in order to get that, and we heard that from Marco Rubio, we've heard that from all of the officials from the United States, we've heard it from some of the signal chats that we also were privy to, that Europe needs to pull its own weight on defense, and this is their attempt to do so.
Ali, this comes as President Zelensky also says he wants to meet with Putin in Turkey for talks tomorrow.
Yeah, so listen, so Zelensky said no matter what happens, I'm going to be in Turkey tomorrow, so he's going to meet with President Erdogan tomorrow. There is a question about whether or not he will then go from Ankara to Istanbul to meet somebody, a representative from the Russian side. We do not know who from Russia could possibly attend these meetings. We think it's probably unlikely from what I'm hearing that it will be Putin himself. It could be Sergei Lavrov, the foreign minister, but this is all part of Zelensky's plan to basically demonstrate to the United States that Ukraine will never be the impediment to peace. And this is, in fact, what we heard from Zelensky yesterday, saying that if Putin doesn't come to Turkey, it will be a final dot and a demonstration that Russia is not ready to end the war. What he is trying to communicate to the United States is that it's Putin that is going to be the problem. It is Putin that is going to be the impediment to peace. And if he is able to convince the United States of that fact and convince Donald Trump of that fact, we know there is a draft bill waiting right now within the Senate that has been put forward by Lindsey Graham that would bring all kinds of new, fresh sanctions against Russian oil and gas that would really cripple Russia's ability to generate capital. I am very suspicious that this alone, if Putin were not to show up, would be enough for the Trump administration to turn on that. But this is all part of building the case on the Ukrainian side to say, listen, we're not the problem, Russia is.
Ollie, thanks so much. Oliver Crook there in Berlin. Meanwhile, French President Emmanuel Macron has urged the European Union to step up pressure on Israel over the humanitarian situation in Gaza. Now, for more, let's go to Bloomberg's Caroline Conan in Paris. Now, Caroline, thank you for joining us. President Macron accused Benjamin Netanyahu of shameful behavior in blocking aid to Palestinians, a toughening of language from the French leader.
It is kind of a toughening of the language, even though we know that Emmanuel Macron has already had very tough phone calls with Benjamin Netanyahu over the past few weeks. He said last night on primetime French television that he was very angry at Benjamin Netanyahu last time he spoke with him about the situation in Gaza. And in fact, Emmanuel Macron traveled to the border of Egypt and Gaza early April, where he said the situation there was very brutal, with Israel trying to block access of humanitarian aid to the Gaza people. He said last night again, the situation in Gaza is a humanitarian tragedy. It is unacceptable. And what Emmanuel Macron has been pushing for really over the past few months is the creation of a Palestinian state, the double state solution. This is something that actually he's been talking to leaders in the Middle East about. He had a phone call with Donald Trump about this when he was visiting his Egypt counterpart in April. And this is also something he's trying to push with Saudi. And this is kind of interesting in light of Donald Trump in Saudi, and Donald Trump saying that his dream would be that Saudi joins the Abraham Accords with Israel, and he's looking to expand the Abraham Accords to other countries. And in fact, Emmanuel Macron has been trying to kind of try and normalize the relations between Saudi and Israel. And in fact, France and Saudi are going to hold together a conference in New York in June about this possibility of a double state Palestine and Israel solution. Clearly, last night there was a shift of tone and a possible reassessment of the European policy towards Israel.
Yeah, and Caroline, he made these comments in a wide-ranging interview last night. What did he have to say about some of France's domestic issues?
Yeah, he spoke for more than 3 hours, mainly international headlines, but clearly he was expected to announce a referendum, something that he didn't do. He kind of pushed this idea back to perhaps later this year, perhaps in the fall. What we know is not going to ask the French is a referendum on immigration. He ruled that out. He also ruled out a referendum on the retirement reform, because he really wants wants to hold the retirement age to 64 years old, a reform that he spent months to pass a couple of years ago. But the French are in favor of a referendum. They put security, debt, deficit at the top of their priorities. Having a referendum on debt and deficit is an idea that was also floated by the Prime Minister François Bayrou a couple of weeks ago. So that could be something, but of course the risk is that the French transform this referendum possibly into a plebiscite for or against Emmanuel Macron.
Caroline, thank you so much. Caroline Cunard there in Paris. I'm going to Paris, so I'm looking forward to seeing you a little bit later. Now, coming up, the U.S. president looks to rewrite the rules on exporting AI chips to China. We'll dig into the details next. And this is Bloomberg. Welcome back, everyone. Now, Donald Trump has said he'll get rid of regulations on AI chip exports that were introduced by Joe Biden and introduce new rules aimed at limiting the progress of advanced technology in China. Let's get more now from Bloomberg's Tom McKenzie. Tom, it's so good to speak to you. How significant is actually Trump's plans to rewrite the AI chip curbs?
Yes, so very significant, and particularly on the timing, given where he is in the Middle East, because the chip curves put in place towards the end of the Biden administration, pretty rushed, and faced a lot of pushback from corporates like Jensen Huang, and Nvidia was very outspoken about the impacts that was going to have, and also pushback from some of the US partners and US trading partners and allies as well. And what that rule was, it was called a diffusion rule, put in place again by the Biden administration, which essentially had a tiered approach to who could get access to the most sophisticated AI chips. Within that middle range were Middle Eastern countries like Saudi Arabia and the UAE. That rule has now been suspended. The Trump administration is working on their own rules. They said the rule put in place by the Biden administration was unworkable and would impact the innovation for the US and impact their ability to be diplomatic as well with some of their partners. So they've got rid of that rule. What it means is that the UAE and Saudi Arabia now have access to those top-end Nvidia and AMD chips, and we've seen a lot of deal-making in that space. The UAE could take ownership of more than 1 million Nvidia chips, for example. Nvidia also expected to supply about 100,000 chips to the Saudi Arabia. AMD as well, their competitor, also in the mix. So it's a massive change, hugely significant for Saudi Arabia, hugely significant for the UAE, and as well Nvidia and AMD within that space. Yeah.
I'm still just looking at you in admiration that you said it correctly. Chip on
Finally.
trip. I can't say it. Meanwhile, Tencent has also reported earnings. How do they look like?
Yeah, look, China's most valuable company, so a gauge on the health of the Chinese consumer, but also a gauge on China's own AI efforts. And interestingly, they came through with revenues that were a beat, but in terms of operating profit and net income, a bit of a miss for Tencent. The parts of the business, so fintech and cloud, that are really most closely connected to the health of the underlying Chinese economy, came in pretty flat. Gaming outperformed. And interestingly, on AI, they did say, executives, they are starting to see tangible positive impacts to earnings as a result of their investments around AI, which they will be stepping up as well. Prosus, a major stakeholder, of course, in Tencent, the last time I checked, was gaining on the back of this news.
Tom, what about Apple partner Hon Hai?
So their quarterly results came in pretty solid, above estimates, but it's the guidance from Hon Hai, of course, the large producer of iPhones, the major manufacturer for iPhones for Apple, but also hardware that goes into the server and data centers around AI. So they have that AI exposure as well. And they actually cut their forecast because of concerns and uncertainties as a result of tariffs. We've heard a similar thing from Apple as well in terms of their expectation around sales. They've moderated their view on sales and also have accounted for some of the cost as well of the tariff impact. Hon Hai also now adding caution to that picture looking out towards the end of this year.
Okay, Tom, thank you so much. As always, a terrific roundup of all our big tech stories are Tom McKenzie. Now, Burberry earnings beat expectations. The British fashion firm also said it could cut as many as 1,700 jobs to reduce costs. Well, our very own Charlie Wells is here with an earnings update from the luxury sector. So, Charlie, it's basically, Burberry seems to be going through a big transformation. Investors like it.
Investors this morning,
for now.
Yeah, they like it for now. This morning, so shares are up as much as 10% this morning on the back of this report. But it really does speak to kind of a company in transition. We had that news about the job cuts, but also when you dig into some of these numbers, you get the sense of this transition. You get some, you got a beat, for instance, on like-for-like sales from these same stores. but it was still a decline. And so this just shows the challenge that this company is in, decline of about 6% from the same period the year before. You get the CEO putting a statement out this morning saying, we are in the early innings, in the early stages of a transition here, and talking about a more difficult macroeconomic background. Now, that could be really challenging for Burberry because they've been trying to position themselves in a little bit more of an accessible space.
Yeah, I have to say, it's been a tough ride for Burberry. They've changed creative directors, they've changed chief executive, and they haven't really quite figured it out. But let's see if, of course, the new CEO, Joshua Schulman, can turn it around. Richemont. So this is hard luxury, right? It's basically the watches.
Absolutely. So it's kind of, from Burberry today, we got very much kind of exhibit A from the soft luxury space. Yeah. Richemont, we're going to get exhibit B from the hard luxury space. And if you take a look at how these kind of different parts of the luxury space have been performing, soft, not great this year, hard, pretty well. And we're expecting a solid report from Richemont. But one risk that this company has, and they're headquartered in Switzerland, is that dollar depreciation we've been seeing. So that could be a headache.
Okay, it's really interesting because there's a lot, I always go to Andrea Felshton. I'm like, what do you want to buy? Because it's a good benchmark of who does well and who doesn't.
She has such a good sense of kind of what the trends are, what the consumer wants. And I think that's what these firms are trying to navigate right now, is this kind of difficult, uncertain moment. But it's seeming like that high-end consumer who can kind of spend in either kind of bad or good economic weather. That's what's really benefiting firms like the Richemonts, but we'll have to watch on Friday.
Yeah, Charlie and I are going to have our own benchmark. If you don't want the bag, there's a good indication the share price may not go up. But Charlie, thank you so much. Charlie Wells there with the very latest on luxury. Now, back to our top story. In the last hour, President Donald Trump has said that the U.S. is exploring normalizing relations with Syria's new government after the toppling of President Bashar al-Assad. Now, Trump also spoke about relations with partners in the Middle East during a meeting with Gulf state leaders in Riyadh.
I've seen such progress. It's really incredible. I've also seen great unity and friendships. I've spent a little time with you just before this, and I've seen tremendous unity, tremendous friendship, and the whole world is watching the Middle East, and many are watching with envy. You have something very special going on.
Well, of course, we'll have plenty more on the visit of Donald Trump to the rest of the Middle East. And then we also have our Qatar Economic Forum tomorrow. The other story we're watching out for, and this is away from earnings, away from geopolitics, in the banking sector. Now, a dozen former Credit Suisse bankers were unlawfully stripped of their bonuses when UBS bought its collapsing rival. Now, this came out today. This is according to a Swiss court. And that's what they said in a verdict that could pave the way for fresh lawsuits from hundreds more employees over unpaid compensation. I know it's something that our viewers watch very closely. Again, the court said the government's decision was wrong in its application of the banking law. The court also said that it was disproportionate and it does not demonstrate that the affected managers caused excessive risk or jeopardized Credit Suisse. Now, in other news, don't miss our exclusive interview with the chief executive of the European defense and aerospace giant, Leonardo. That's airing tomorrow on Bloomberg TV. Up next, Bloomberg Brief, and this is Bloomberg.